The headlines are coming at us these days thick and fast. And if we buy in and sell into each one of them, we often get caught out. And that's what we try and advise clients.
Yes, it's time for Coffee Break Commerce, your business and Forex audio fix created by Absa Corporate and Investment Banking. Hello again, listeners, and welcome back to Coffee Break Commerce, the podcast that's now made a name for itself, deciphering and decoding your economic and currency issues, all in the time it takes to drink a cup of coffee. So, what are we talking about today? In short, it's current affairs and currency. As we move further from 2020 into 2021, what has been happening in the global and local environment, and what does it all mean for our own South African rand? We're joined again by FX Research Authority, Mike Keenan, Principal and Head of Fixed Income and Currency Strategy for Absa. Hi, Mike.
Hi, Justine.
Now, Mike, let's just clarify. In terms of current affairs, we are particularly going to be talking about things like the medium-term budget policy statement released in South Africa last October, and also the US election, the very eventful US election, which has now led to Joe Biden's inauguration. So first, can you paint a picture of the resulting factors at play due to these events in the current rand environment?
Absolutely. Those have been two critical events for the rand to contend with over the past little while. We've seen a huge, what we call a relief rally in global markets after the US elections. Markets don't like uncertainty, and in the run-up to those elections, there was a lot of uncertainty. We've got the election result now. People are still working out precisely what the new administration will bring to the table. But at least there is less uncertainty on that front. And there's also less uncertainty when it comes to the UK-EU Brexit deal. There's been a deal brokered also around the turn of the year. So markets are feeling a lot more upbeat about that on the global stage. Of course, hopes about vaccines surrounding the pandemic have also added a bit of euphoria to the markets. And that typically does very well for our rand. The rand doesn't do well in risk-off environment when market volatility is high. So that tide has turned, and we've seen it in the numbers. The rand has strengthened phenomenally into year-end, getting down to 14.5 against the US dollar. And I suppose the challenge now is, and you mentioned about the medium-term budget, is the story back home. South Africa still is grappling with some fiscal challenges, and they were outlined in the medium-term budget, and we're now waiting to see what's going to come at the main budget in a couple of weeks' time.
So tell us a bit more about what this maybe means for the next few months and even 2021 overall. What's the research saying?
Well, essentially, if global risk appetite remains pretty robust, then the rand is probably going to consolidate a lot of the ground it made back. Of course, last year we weakened prodigiously when the pandemic first broke and when we had those downgrades in South Africa that ejected us from the World Government Bond Index. So we've recovered significantly, and I think a lot of good news is priced in around things like we were just saying, vaccines, less uncertainty around geopolitical risks. But now the real hard work begins, because now we've got to actually see all that optimism filtering through into the hard economic data. We need to see global growth picking up. We need to see commodity prices continuing to rise. Those would be very supportive factors for the currency over the coming months. But if all of that good news is already priced in, then perhaps those global factors are going to start struggling to keep being rand supportive. And then on the domestic front, there I think the jury is still out. We've still got a number of headwinds facing South Africa. We need to try and consolidate the budget deficit. We probably are done in terms of interest rate cuts in South Africa, so that's good for the rand. But it's really on the fiscal side that we need to see some further improvement. We need to see our growth rebounding, confidence picking up. Those are the kind of indicators that are going to give us a sense of whether or not the rand will strengthen further or probably give back a little bit of ground as the year progresses. So there are some encouraging developments taking place. We are seeing some fiscal consolidation taking place in certain areas. We had the public sector versus government, court case going in government's favour towards the end of last year. So that means that government's still on track to rein in the deficit. And then I think also growth has surprised most people to the top side in the third quarter of next year. We need to see if that continued into the fourth quarter and beyond. We've got the second wave of COVID now hitting us, so we need to see how that unravels in the economic data. But I still am of the opinion that things are going to get better from a very, very low base. Last year was a tough year. We experienced a big decline in growth, a big drop in confidence, a lot of uncertainty. And the sheer fact that globally we're getting a lot of stimulus, the fact that domestically we're also getting support from the Reserve Bank with lower interest rates and some support on the unemployment side as well from government, I think the bar is not high for things to improve. And in that regard, the rand should benefit.
I do remember, though, in a previous episode, the research at the time was saying that most of the gains that the rand is likely to make in a sort of recovery situation post-COVID would kind of taper out within or by the end of the first quarter of this year. Is that still looking likely? I mean, obviously we have second waves and potential third waves going on now, but what's the sort of updated outlook?
Correct, Justina. That we're still holding to that view. We also said last year that a lot of local investors would have to bring some rands back due to sort of regulatory requirements. We think a lot of that's done. So that's out the way. And we still do believe that now it's going to be difficult for the rand to improve upon those levels that we saw in December last year, 14.5. So we think that rand will probably start edging weaker in a gradual fashion. So we've got a forecast of now 15 to the US dollar by the end of the first quarter. And then we think that the rand will probably end the year closer to 16.25. So it's not as bearish as what we were the last time we spoke. We were expecting 16.5 by the end of this year, in our previous forecasts. But we do acknowledge that the risks are still there. A lot of good news came into the market. A lot of the recovery has taken place, like you just said. So we think the balance of risks are probably shifting because, like we've also said before on these discussions, is that the rand tends to move in cycles. And we've had a very nice recovery cycle. So I think we're going to weaken. But I must emphasize it's more of a gradual weakness than any kind of blowout that we experienced last year.
And perhaps to end off on a practical note, what would you say that investors and traders need to do or bear in mind in the midst of all of this?
I think one of the things that we've sort of encouraged clients over the years, especially more recently, is just always be careful of reacting quickly to events as they unfold. There's been a lot of event risk that's come our way in recent times. So be careful about jumping too quickly when news bites come out. Wait for the facts to be confirmed. I think if we do weaken, we're going to be weakening in a gradual fashion. So there's no reason to panic. Take your time, look at the trends. The trends are going to take time to establish themselves. And hence there's no urgency to go out and when the rand, let's say, like it did earlier this year, pop up to above 15 in a short space of time, to suddenly go and cover all your kind of commitments for the entire year. And just be careful of headlines. The headlines are coming at us these days thick and fast. And if we buy in and sell into each one of them, we often get caught out. And that's what we try and advise clients. Take a long-term, medium-term approach when deciding on your foreign exchange exposure.
Thank you, Mike, for your insights. I think that's a wrap for today's Coffee Break Commerce, created for you by Absa Corporate and International Banking. Thank you, listeners, for joining us and joining the conversation. We'd love you to tell us what topics you want future podcasts to focus on. Send us your questions, and please share this episode with interested friends or colleagues. Till next time.